All right. So, welcome to Market Outlook, the weekly Market Outlook with the Traders Guild. We're going to go ahead and check out. It's this week, April 23rd. And we're going to go ahead and check out what the upcoming week has in store for us. You feel me? Take a look as well as some of the things that was going on last week. I actually kind of said last week, I said on a call last week that I'm not looking to predict the markets. And that was not something that I was looking to do because it was looking real ghetto. You know what I'm saying? It was looking really ghetto, and I already saw what type of time they was looking to be on. And that's the type of week it was, right? If you found a move, then good job, happy for you. But I wasn't expecting, nor did I desire to find anything in that type of price action just based off the way I trade or just based on where my skill level is at. You know what I'm saying? So with that being said, we're going to go ahead and start ourselves off. We're going to start with the same thing as always. We're going to start off checking out the news. Let me go ahead and make it so that the Discord can see everything. Not everything, but everything. You know what I'm saying? They're going to see everything. So let's see. Let me put my stuff on D&D. All right, cool. So, investing.com. Let's go ahead and check out what we got going on for the week. Check out the news. Where is it? Where my economic calendar at? All right, there we go. I actually finally made an account. You know what I'm saying? I've been coming to investing.com every week and having to reapply the same settings. I'm so glad now that I made an account. So this week, just starting off today, nothing today. Even just starting off tomorrow, it looks like we're gonna have some Euro news to start the day off ahead of New York session. We're gonna have some 2-star and 3-star news on Euro starting the week off. So now, because of how the price action was from last week, I'm not really in a rush to be participating off this on Monday, but we'll see what Euro got going on, and I'll kind of decide whether or not that's something that I feel like will be valuable. And then we got Canadian news in the morning. Hold on, let me close this door real quick. All right, but we got Canadian news, CAD news in the morning. Then just coming up for the week in general, looks like it's going to be an Australian, New Zealand holiday on Tuesday. We're going to have building permits, US, 5-star, 3-star, red folder news at 10 a.m. Okay, so, definitely can expect a late market move on Tuesday, right? And doesn't mean there won't be any opportunities early, but there will be enough opportunities at or after 10 a.m. that one could just wait until 10 a.m. And be patient, right? Don't have to rush into anything. And then coming out Wednesday, though. Wednesday we got AUD CPI, and that's Tuesday at 9:30 for us, but technically that's Wednesday price action, right? So that's coming out on Wednesday. And then we have, on Tuesday night, right? But then going into the Wednesday session, we'll be having more USD news, Reds folder news at 8:30 a.m. and then again 10:30 on that news. 1 second, guys. All right. My dog will wait all day and she won't eat no food until I start recording something. She'll do it every time. All right. So then we have also, it just looks like it's only going to be USD red folder news on Wednesday. And then we're going to have some red folder news for US dollar on Thursday as well, but that's going to be GDP, Q1 GDP. So that should be a very interesting. And then home sales 10 a.m. It's going to be a very interesting week indeed again. JPY, I like this, right? Thursday, I I love when BOJ has late night news. So we got news Thursday 11 o'clock going into Friday. So you might catch me on UJ or GJ going into Thursday, going into Friday morning. I might catch that London session or that Asian session. Okay, France. I haven't really ever seen France news. I'm gonna just be honest. I've never seen that. So they must be standing up for themselves or something going on. I don't know. But we got France news coming this week. I've seen French like CPI, but I've never seen their flag there. And that's new for me. But we got French CPI dropping on Friday as well. But the only real Euro, okay, then we got Euro red folder news. The only real Euro red folder news is gonna be Friday. Oh, we got some CAD red folder on Friday. Okay, this week may be a very interesting week. Now, yeah, so Euro news, we got Euro news tomorrow at 4 a.m. and then we don't have any more Euro red folder news until Friday. So until Friday, it's pretty much just gonna be US dollar news, honestly. Right? Let's clear it up. But it ain't nothing like CPI or NFP or anything like that. So it's the perfect time to trade, right? Perfect time to trade. But we'll see what the price action is looking like. That's what's really majorly important, is the price action. All right, so let's go ahead and get it popping. We're going to switch over to TradingView. Like, why it's not switching? Oh, okay. All right, bet. And so we'll switch over to TradingView. And let's go ahead and get the porty popping. Looking at DXY, of course. I was going over this on Friday with QB, and I actually recorded it, and that thing said, yeah, we're going to delete. Yeah, we're not, well, not delete, but I had one of those instances where none of my audio recorded. It's like the worst, definitely the worst. But DXY all last week, this was all of last week's price action. And there's only one word for this type of price action. It's consolidation, right? It's consolidation, right? So we had an expansionary phase on the dollar. Then we had a retracement up into this fair value gap, back into this daily order block here, which is this, right? And I actually want to use, right, we'll actually go ahead and use this, a different chart. Yeah, we'll go ahead and use this chart. All right, so yeah, this order block here on DXY, boom. Like that, right? So this order block, we had an expansion, and we had a retracement back up to the order block, and then we're getting a bit of consolidation, right? Or in another word, accumulation, right? So they're getting ready for a big move, okay? Now we have this order block here, and then we have this order block down here. So I'm just gonna be honest. This is why I was saying at the top of last week, I need to see a little bit of something, because right now, I mean, it makes complete and total sense that they're accumulating in this area, and so I wasn't surprised at all. But I was saying that regardless of if they are going to trade higher, before they trade higher, I would want to see them trade down into this fair value gap right here, right? I would want to see them trade back into that. You can literally see all week long, they never did, right? Literally came back to it a couple times out of the week, and just like literally we got nothing. I mean, price on Monday was 101.58 and the price at close was 101.73. Literally just consolidation all week. So it wasn't much to really anticipate when it came to that. But going into this week, I mean, just gonna be honest. I mean, same thing as last week. I'm not looking to do too much predicting. I'm more so looking to go ahead and respond to what the market shows me. And given we're in this consolidation phase, I want to see manipulation. I want to see them sweep liquidity, right? And so let's identify where some liquidity is at. Sunday of last week, or open of last week, was down at this low here. I'm gonna go ahead and I'm gonna go ahead and map that right there. That was last week's open. This will help me kind of get an idea of what's going on. Last week's open was there. Then we got some liquidity sitting underneath these double bottoms here on dollar. And as you can see, I mean, they ended last week with a lot of aggression towards those lows, right? I mean, I was anticipating bearish dollar to finish the week, but we never got this, the drop. It's a lot of imbalance sitting under here now. We do have imbalance sitting up here as well. So again, it's just one of those areas. So all you can really do is identify liquidity, right? That's all that we can really do in situations like this, is identify, we can identify a bias on the higher time frame, which I have on this dollar chart. If we go to the weekly, or even the monthly, I believe, right? Yes, on this monthly chart, we have 4 days left in this month, right? 4 days left in this month. And when that, is the case, typically price will rush to deliver to zones of liquidity as the month closes out. And I have this blue zone highlighted as the monthly bullish order block, right? Where you had a bullish candle engulfing this last down candle, right? Before the market traded higher. But then we got this, candle that literally came in and almost engulfed the candle that engulfed it, right? So this month I was looking to see, would they sweep, these lows here, and then would we then trade higher, as a response in this order block? Because until this month closes, this candle still has not closed below this order block, right? I mean, this month could finish off, right? We could finish off, up here, right? We could finish off above the order block still, which would give us, a good understanding of what's playing out. But just looking at, the lows from here, May 2021, when this big push happened in the first place, I just drew my fibs from the low to the high. I think I had only went to the body of the candle, right? From the low to the high, and just identified this blue zone here as our area of discount, right? The area where on a monthly time frame, this is where buyers would be induced into the market. And right now, where we're playing at is the equilibrium of that, right? This is the 50% discount, right? So from 2021, the dollar right now is at a 50% discount to purchase, right? That's why I say, okay, yeah, I believe it. The dollar's gonna fall, the dollar's gonna crash. I believe it. I get it. But it's not going to happen when they're telling you it's going to happen. That just doesn't make sense, right? That's not in their best interest. So as far as I'm concerned, right, the dollar, they want the dollar at a discounted price. That's when they're going to want to buy back into the dollar and get into it, so that the value of it can skyrocket, and then the value of everything else can crash. That's the higher time frame value, right? Where I can predict things, I can look at things. Thank you. On the higher time frame, that's a lot easier, right, for me to look at the higher time frame, come up with my bias based on that. But we're not trading based off of the higher time frame. So that's why I was kind of saying that all we can do on the lower time frames right now is identify our areas of liquidity and respond at certain times of the day when the market makes certain moves that we are used to seeing, such as liquidity sweeps, such as recoveries on fair value gaps, such as expansions from order blocks, right? That's all it is that we can really do. Okay. However, like I said, just on a higher time frame, the place that has my attention is the fact that we have this big old imbalance below where we're at right now, that we've been trading lower, aggressively, that we've crossed underneath the 50%, and we're starting to accumulate orders in this zone. I mean, I wouldn't be mad to see them drop a little bit lower. And then also using crypto to kind of help me come to that. I feel like crypto is going to drop again, of course, before it goes higher. Of course, dollar cost averaging, whatever your investment strategy is on those, definitely go ahead and, do that. But even if it's only back down to this, fair value gap at 18,000. I mean, I really want to see her come down into this 12,000 level, potentially even sweeping the monthly sell side at 9, but at least down into this 12,000 level is what I'd like to see on BTC. But the whole idea being that I expect some sort of a retracement. Okay, and the next order block, the next fair value gap, the next key resistance for me to pay attention to on crypto is a little bit ways away. Like from where we're at right now on crypto and this order block, there's no resistance. This is all in balance, right? So I could definitely see price closing out, maybe even up to 38K, right? Maybe even up into 40K, right? Because people are going to get excited at that 40K. People are going to get excited. People are going to start to buy in heavy. And when people have to buy, somebody has to do what? Somebody has to sell. And usually it's the market makers who just so happen to be selling when everyone is buying. 40K definitely seems like a good place. You just got to think about it, guys. They're priming the market, right? They're priming people. They're getting people ready to give up, right? They're telling people, yeah, the dollar's going to drop, dollar's going to drop, dollar's going to drop, dollar's going to drop. And at the same time that they're telling people the dollar's going to drop, 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 crypto, and you got Bitcoin at 40K, right? So what do you think most people are going to do who weren't listening to us a year ago when we were talking about crypto, 2 years ago when we was talking about crypto? They wasn't listening. They feel like they missed the train, and then they saw it drop, and they saw it drop forever. And now the market has somehow convinced them that their dollars don't hold any value and that they should get rid of them. And they're going to want to get into Bitcoin, right? Because the government's going to offer them Fed now. Most people are not going to be ready for Fed now. They'll probably take it as a stimulus check. Either way it goes, they're going to get out of the dollar and they're going to get into the crypto world, right? And so I just feel as though it's kind of in alignment. So as much as I would love for the dollar to shoot up this week, if it does, I'll give a different analysis, right? But based off of what we're seeing right now, I could definitely see crypto shooting up another 10K. And that goes along with the dollar shooting down, right? Another 25% discount or so, and then going ahead and gaining ground here in this monthly fair value gap from last year, first quarter of last year. And then from there we grab a foothold and then we trade higher. Okay, so with that being said, coming back down to that lower time frame, like I said, instead of trying to predict the same way that I was able to look on the higher time frame, is because we're trending on a higher time frame, right? Like there's more for me to see. There's more information for me to see. But based on where we're at right now on the daily, and just before we even looking at any lower time frames, like I said, I would just pay attention to where are my areas of liquidity, right? And like I said, we have double bottoms down here, right? We have some double bottoms down here to pay attention to. Liquidity all along down here. I mean, anybody should be able to see that, right? It's a support, okay? And if you're new watching this recording or in the lounge, like if you're new, like you can just even call support liquidity because most retail traders use support as a buying area and most, retail traders use resistance as a selling area, right? And then on the top, we have this buy side liquidity from the highs of April so far, right? April's highs are our new buy side liquidity, and right above April's highs we have a large amount of imbalance gaps up here. Okay, so like I said, when you look at the daily, you have an order block here and you have an order block here. All right, we're stuck in between these two imbalances, so it's just a matter of seeing them accumulate and then watching which one of these levels of liquidity, where do they run to, or what position is the market in at a certain time. So I'll give you an example, right? Let's say this week opens up Monday or Tuesday, and on the 4 hour or on the hourly time frame at 8:30 a.m., right? 8:30 a.m. Let's go ahead and say that the dollar has traded back higher, right? They gave a lower low. All right, gave us a lower, barely, I don't want to go all the way down there, but this in itself is a lower low. So they have a lower low right here, and we see them trade back up. Let's say they trade back up 70% of this, right? They trade back up to an area like this, right? For kicks and giggles, let's say they sweep the liquidity, right? Let's say at 8:30 a.m. on Tuesday, news hits, and they smash through this liquidity just like this, 8:30 a.m. I'm just going to be honest with you. If something like that is happening, all right, I want to be selling when the market is supposedly pushing up at these key times, and I want to be buying when the market is supposedly pushing down. So if you don't have the muscle to just take it at a high, that's okay, but just be aware, right? If they're doing something like that 8:30 a.m. in the morning and we have all this liquidity down here below us, then I would identify something like that as a sweep on the liquidity here, right? They sweep that liquidity there, or even, push up here and take this liquidity, whatever the case is. And then I watch them drop back down below the order block that they took to come up there. And then I see them trade back up into that, right? Something like that, right? That is when I would take an opportunity for them to attack the liquidity down here, right? So that's why I say that really the most important thing on a week like this, especially when there's a lot of consolidation, it's not as clear what direction the markets want to go. Identify my areas of liquidity and pay attention to at what times it is that we're attacking these areas of liquidity. And then you can use the other one as a target. Something I was kind of going over as well, like, this whole week was consolidation. From Monday to Friday, we were bouncing back and forth all week. But when you really pay attention to it, right, this wasn't an accident. The places that it was bouncing back to, I mean, here you have this order block on the hourly time frame, right? Got that order block on the hourly time frame. And right here at 7 a.m. in the morning, DXY trades into the order block and trades away. Right, so this is the example that I'm giving you, right? And then, boom, you have another order block down here, right? Boom, that was formed at 8 p.m. the night before. And the market trades down at 10 a.m. in the morning and trades into this order block and then rejects, right? And then we have this order block here, right? Boom. I mean, I probably wouldn't have used that but I'm just showing you guys, like, nothing is happening by accident. Pay attention to the time. 8 a.m. in the morning, sweeps back into this order block, trades lower, and then what is this? 10 a.m. in the morning, trades back into this order block, and then trades higher, and then trades back into the same area. You get what I'm saying? So, and mind you, the big gray box, that big gray box that you see, that's the daily order block. So literally all week long, they came back up to the daily order block, 8 a.m., traded away, right? Thursday, 8 a.m., traded away. 10 a.m., back into the order block, traded away. So there are ways to be able to participate in consolidation, but you got to know your stuff. You feel me? Like, you got to know your stuff. And that's why I say, instead of focusing on predicting the market on weekly outlook, just let's identify our areas of where is the liquidity, right? Let's identify these order blocks, identify these gaps, these imbalances, and let's go ahead and respond at these times, like 8 a.m. and 10 a.m. in the morning, 3 a.m. in the morning, right? It's I mean, you cannot make it up. It's on the chart, right? You can literally see the times where these swings happen, okay? Now, over this last week, while most of this was going on, there was moves I wanted to catch on, like USD JPY, and I caught like this second one I was able to catch, and I talked about it in the forum, but like this first one I wasn't able to catch on UJ because it moved prematurely. But it was just, even though the markets moved and I was able to find setups on these, it was very choppy. It was very difficult. It was a fight tooth and nail just to get the setup, right? Like, just to be honest with you, like I map out this setup and look at how many times they came back to the entry. That's ridiculous. You know what I'm saying? Like, came back to this, honestly, setup I hadn't mapped since Wednesday. Honestly, since I think before that, right? Like, this high, we had identified this high on weekly outlook, right? And literally on market outlook, we identified that buy side liquidity up there. They traded right up into the buy side right here. What was that? 5 a.m. in the morning, and they rejected immediately, came down, never came back up there, right? I wouldn't have been awake at 5 a.m., but if I had a pending there, they never came back to that the whole rest of the week. But here, when I was trying to catch inside this fair value gap up here, they came back up into that thing so many times. They literally had to fight tooth and nail for one setup, just for one setup. So the currencies are cool, but when the dollar is consolidating, man, it can make the currencies a bitch. I'm just gonna be honest. It can make the currencies a bitch to trade. So when the dollar's consolidating, I prefer to trade JPY pairs like GBP JPY, AUD JPY. Like this one, this was just such a freaking textbook move. Again, I don't remember if it was Market Outlook that I had marked this up or if this was just personally, but this is just textbook. It's everything that I'm showing you guys, right? Lower lows, lower highs, lower lows on a daily time frame. From the high to the low on the daily, identify where the premium is, which is between the 60%, 70%. And that's where this premium is up here. The big light red box is the premium. And then just on a lower time frame, I'm pretty sure this skinny red box is the fair value gap on the 4-hour time frame, which was right here, right? A little box, 4-hour gap from the order block that dropped. Boom. We got this gap, and I just mapped that out and literally came right back up to it. And then the target was all these just slowly building lows and targeting the sell side liquidity down here, and it dropped straight to it. You feel me? Like that's in itself was a 1 to 5. So when the dollar's consolidating, I would prefer to trade JPY, but specifically, I would prefer to trade, the indices. You feel me? US30, NASDAQ, SPX. I would prefer to trade those in a week like this if I'm going to trade, because in a consolidation, I pretty much lose my ability to use and leverage the dollar as a proper indicator or confirmation, right? Because there's no real trend to it. There's no real direction to it. So I kind of lose that in a week like this. But the indices actually gain a confirmation in weeks like this, right? Because typically when the market is accumulating on the dollar, what happens with the indices is they diverge, right? They diverge. So they do the opposite of what they're supposed to normally do with the dollar, okay? So normally indices are supposed to go the opposite of the dollar, right? And I'll go ahead and give you guys an example. Normally, indices are supposed to be inverse to the dollar, because in order to buy a stock, you have to sell $1. It just makes sense, right? So as the dollar goes up, indices would go down, because if people are selling stocks, they're gaining dollar. And if I'm selling dollar, I'm buying stocks, right? So naturally, they're supposed to be inverse. So whenever I notice that I'm getting a correlation between the dollar and the index, and the base index, guys, is US30. So if you are an SPX trader, for example, you still would leverage US30. And here's how. All right, here's how. Right, y'all drop some twos in the chat if you follow me. All right, here's how. Right, for one, first and foremost, I'm gonna compare US30 to the dollar. Right, so let me see if I got twos. I ain't got no twos. All right, y'all not following me. So look, I'm going to compare my lows and my highs to US30 to the dollar. So boom, Thursday, 3 a.m., I had a low. And then Thursday at 10 a.m., I had a lower low, right, on US30. So I had a low here, I had a lower here, lower here, lower low there. Then I go to DXY, all right? So Thursday, DXY at 3 a.m., I had a low right here. And then Thursday morning at 10 a.m., I had a lower low, right? So right here, if I'm trading this live and I'm looking at US30 live, that's not making sense. They're not supposed to be going the same direction. They're supposed to be going opposite directions, right? That's what this area is right here. So in that moment, I notice a divergence. That means that there's a higher probability that I'm going to see a reversal, or I'm going to see the market change trend or change direction. So given the whole week going into Thursday, right? US30 opened up here, 33,862. And by Thursday, we were at 33,701. So the market had traded lower all week long, right? And then I get this divergence on the dollar right when we're trading into this order block, right? This hourly order block over here, right? So at the same time that we're trading into one of my confirmations in the past, I'm getting a confirmation of a divergence between the dollar and US30. So that's that's confirming and showing me I can expect a reversal. So that's what I meant by using divergence as an added confirmation. Now, the other thing is that the indices are supposed to be correlating with each other, right? They're supposed to be inverse to the dollar, but they're supposed to go the same direction as each other. So when I looked at something like US30 and I'm seeing lower lows on US30 Thursday morning, and then I look at something like NASDAQ Thursday morning on NASDAQ, I was getting higher highs, right? Matter of fact, by the time we got to 10 a.m., NASDAQ had already made its push higher, right? US30 was still sitting at the low at this time. At 10 a.m., US30 was just now sweeping the lows because that's the move I had caught, right? SPX 500 on Thursday morning. SPX 500 on Thursday morning, we have this boom low here, and then similar situation as US30, right? We get the lower low here, but actually, intriguing enough, like it didn't close lower. So the whole idea is that if SPX is diverging from either the dollar or US30, then that's giving me a confirmation, or from NASDAQ, that's giving me a confirmation. So me looking for these divergences, it makes me a little bit more confident to trust a setup when the dollar's in consolidation. So that's the reason that I would prefer to trade indices when it comes to like times when the dollar's consolidating and stuff like that, right? But yeah, going into this week with with JPY, like I said, I'm not going to try and predict the dollar, but based off of, and with that being said, I'm going to have to see some confirmations with the dollar for me to take anything with UJ. But just looking at the daily time frame on UJ and seeing the price action that we've been having, let's take a look at the monthly real quick. 4 days left in the month, and we've had a bullish month so far. Opened up at 132. We're about 200 pips away from the open of the month, after we just ran into this order block and traded away from it. So I wouldn't be surprised to see some sort of, well, I'm just going to identify that fair value gap, right? I'm just going to identify that big behind fair value gap on UJ, sitting above this monthly buy side liquidity right here. All right, so that monthly buy side liquidity is interesting to me. Down here is our monthly order block that we traded away from. We traded away from that monthly order block. All right, and then we had this order block from March that we traded away from at the beginning of the month, right here, as we came out of that that monthly one. Boom. All right, so yeah, I ain't gonna lie, these highs are looking they looking kind of sweet. They looking a little sweet on the weekly time frame. Not gonna hold you, not gonna hold you. All right, we have not really any resistance between these highs and these lows down here, but again, the dollar is gonna play a big part in what we expect when it comes to UJ. So I'm gonna have to do some patience. Boom. I highlighted that because this last up candle here on UJ from February 20th, that was our last up candle on UJ before they swept the highs here, and then we saw them trade lower back into that monthly order block, right? So this was that last up candle before we traded back to the order block. So this is an important zone that UJ is reacting from. As you can see, last week that sweep that we saw was right up into that order block, and then they came back and traded below it. So I guess you could argue that the only real resistance between UJ and those highs is this order block that we're trading into right now, this fair value gap that we've traded into and rejected from. And that's what we were looking at last week, right? Is the fair value gap that's sitting there right here. Right? That's what we was looking at last week. So they attacked it, but they didn't trade anywhere near as much lower as I was expecting them to. So it's like it's not as consolidative of the dollar, but you can tell that it's really choppy because of the price action that the dollar has going on right now. But the interesting thing about this is that we did come up and take the buy side liquidity here on this daily time frame. We traded above it, came back below, and now again, that next level that we can pay attention to is, again, everything up in this red, because these highs were never came back and taken. Maybe you can argue they tried a little bit right here and wicked back up into that, but not for real, right? So yeah, we still have these highs. We got these highs. We got these highs. UJ has a lot of buy side liquidity intact, but also what? A lot of sell side liquidity intact. So these are those traps, like these are those search and destroy type of conditions that start to play out, especially when the dollar is freaking consolidating, man. Especially when the dollar is consolidating. But let me give you this. Double highs here on the 4 hour on UJ, sitting from last week's high. That was last week's high right there. Last week opened up right about here and came up. We gave these highs right here, traded up, matched that high, and then traded back down. So the areas that I'll be paying attention to on UJ this week, target wise, would be the fair value gap down in here. Right, that has my attention, because the way that they attacked up here, the way we were looking for last week, they went ahead and swept up above these highs. Even though it didn't come above the wick, they did at the very least come above this body, right? So that is something to take into account. Now, I don't like when we get closures above the body, right? Because that kind of shows me we have enough strength to potentially keep going in that direction. So the way that they closed above that, I'm gonna take note of that. But either way it goes, the move that took us that up there started down right here. Okay, so that would make this that order block before we attacked up there. And if I just run my fibs from the low all the way up to the high and just identify the discount, right? Like if they've now come and made a lower low right here, right? Where is it that they would want to trade back to before they went for the buy, even if they were going to go for the buy, right? Where would be the best place for buyers to be enticed into the market? That's where they get a discount, right? That's where they get a discount. They traded back to the 50%, literally wicked away, right? So that was cute, right? They traded back to the 50% here, and then we got an engulfing candle back up. But I'm not a believer, right? I'm not a believer. Right here, this was sweet how they came back up into the imbalance, fair value gap, whatever you want to call it, right? Came back up into that, traded away. I would have expected them to get a little bit more momentum from hitting that to take them into this, right? But that's that dollar price action, right? That's that dollar price action. But I would keep my eye out on that high, right? I would keep my eye out on that high, potentially see them taking that high as a liquidity grab before they continue to trade lower, right, into an area like this. Because this is just so much sell side, so much buy side imbalance. Just like literally just so much buys up that was never traded back into. And then we have the lower lows right above it. Yeah, I would love to see them, do some type of a sweep on that. So yeah, that's what I got going on with UJ this week. I'll keep my eyes open on that. Even, yeah, they lucky we ain't got no JPY news today, because even like where we're at right now, you feel me? It's just the time isn't right for me. It's Sunday at freaking 11 o'clock in the morning. But this is the type of setup that at another time of the day, I would appreciate it. You feel me? Because we seen them form a high right here, dropped, give us a lower low. And then they traded back above that high into this fair value gap. I mean, that's as sweet as it comes. And then they drop back lower. And then they traded back up into the order block that they left inside the fair value gap. Right? That is like textbook what it is that we would look for. So we can tape read this thing, right? But I would not enter this. I would not enter this. It's a Sunday night. Don't be a fiend. You feel me? Don't do it. All right. But yes, down into this fair value gap. I mean, minimum up there, but all the way down to boom, the top of that. And that in itself is a 1 to 285, 1 to 285 pretty much. Even better if they really did come sweep the highs. So the only way that this setup would really get taken is if, say, we're going into tomorrow morning New York session, and New York session is opening up with a bearish dollar, like dollar starting to create lower lows, or dollar just took buy side liquidity, and it's 8 a.m., 8:30 a.m., and we're like right here. Oh yeah, like that's me, right? Or you can just wait for the pullback after that, right? But any way that we take this type of liquidity and then give a lower low, right, down into this order block here potentially, right, I would anticipate the rejection from that order block and taking a sell opportunity into the fair value gap. All right, so we can kind of have our eyes on that for UJ. Like I said, let me put an annotation here. All right, the time we trade into this liquidity is the most important. All right, so that means 3 a.m., 8:30 a.m. Well, I'm gonna just say 7 to 8 a.m. 9:45 to 10 a.m. Right? Those would be the key times that if we traded up into an area like that, then I would be anticipating sell opportunities, right? But maybe any other week I might be, confident in that area, but not when the dollar's doing this. It's just not high probability. It's not worth it. It's nothing that I would like. All right, got the dollar hitting this order block right now. Okay, so those are the type of confirmations that I would look for, right? USD JPY taking buy side liquidity after the dollar made a lower low, traded back to an order block, and executing off that, but at a certain time, right? At key on certain time. My brother Brian was good, bro. My brother Brian, right? So that's the thing for me on UJ. And other than that, I don't really want to talk about EU or GU until the dollar get it together a little bit more. Something like EU is so funny. I actually will talk about EU because I wanted to see EU trade higher, right, last week. But again, it's just so much choppiness. They traded to the liquidity that I wanted to see them trade to for sure, right? I wanted to see them take the buy side liquidity. It's just look at how many times they had to come back to my freaking entry, right, just to give me that. It was just so ugly, right? It was just so ugly, probably time consuming. Only would want to trade it if like life was just at a point where you had to trade like as work. But it's like there's just no reason to work so hard for an entry when you could just wait until the market's not consolidating. But now that they have traded up into this area that I wanted to see them, and they've kind of given us a higher high here as well. Actually tonight, right? They just did this tonight, gave us this higher high. I was looking to see them close out this imbalance, right? So similar, if the dollar is going to go ahead and give us that drop into that fair value gap, right, into all of this, if UJ is going to give us this drop into all of this, right, then adversely, if I don't catch this on UJ, and if I see all my confirmations at the time that I want to take a trade, 8:30 a.m., 10 a.m., right, maybe London session, if I'm awake London session, if I see all those confirmations on UJ and I miss this, for example, then I would turn to EU and I would be like, okay, well, is EU in position? Like what can I see on EU for us to attack into this? And they are setting up pretty nicely. The only problem with these setups are just the time of day. And I mean, I'm seeing a lot of the things that I would want to see to take a trade on these, but just not at the right time, right? So time is very important. And the last two, of course, unless, somebody specifically wants us to look at some vibes, is US30. Good stuff, right? US30 and indices, US30 and gold. US30 and gold. Now US30, I was looking to see her. You can see on the daily time frame for US30, we do have this imbalance down here, so we're not going to avoid that. We're not going to act like that's not there. All right, we're not. I promise you, we're not. But again, the dollar, right? Again, the dollar. So I would love to see us take this, but there's a couple more things that I wanted to see happen first. Let's see how US30 responds at this daily order block. Okay, might just wait for Tuesday, so the markets can kind of give me a little some type of idea of what they want to do. But me, the way that this order block is right here, you can see on Thursday they dropped down into this order block, traded away. Friday dropped down into this order block, traded away. Those are both the moves that I took. I took buys from both of those moves. Again, just based off the time that it was. I wasn't looking for them to take the highs on the daily or no crazy stuff. I just knew at 8 a.m. in the morning, 10 a.m. in the morning, US30 was trading into a daily order block. And at the same time that it was doing that, it was diverging from the dollar, right? So you can kind of see right now, again, we're trading into this daily order block, which would be a key zone for them to expand from or reverse from, right? The thing is that I can use the dollar as an added confirmation for that at the times that I trade. So coming into tomorrow morning, if we're still rejecting off this order block going into tomorrow morning or Tuesday morning, then on top of us attacking this order block, I'm going to go right back to the dollar just like I did Thursday and Friday. And I'm going to look and see, are there any divergences? Right? And again, divergences just means anomalies, right? I know divergence can be a really weird word, but I promise you, we all know what a divergence is, right? If you and somebody talk every single day, right? You guys talk every single day, and at the same times they don't be having nothing going on, and then one day you call them at the time that y'all always talk, and all of a sudden they not available. Like, that's a divergence, bro. That's a divergence, you feel me? All right, that's a little toxic divergence. But either way it goes, you get the concept, you feel me? Because everybody got a little pinch of toxic in them. I seen it, you feel me? So at the end of the day, it's just things that they're not going the way that they're supposed to, right? They're not going according to the trend. They're not going according to what would be normal. That's all that a divergence is. So boom, we got the dollar trading into this order. US30 trading into this order block on the daily time frame. Cool, right? Now when I go trade my setup, I'm just gonna pay attention, right? Monday morning, Tuesday morning, when I look at my chart, New York Open, from London Open to New York Open, did US30 give me higher highs, or did US30 give me lower lows? And then I'm gonna compare that to the dollar. And if it did the same thing that the dollar did during that time, and we're in this order block, I'm gonna anticipate again for them to push away from that thing, right? And that's the only way that like divergence, becomes valuable. But with that being said, as many times as we've come into that and traded away from it, as you can imagine, right? On the lower time frames, we are starting to get a little bit of action built up under here. Right? So if they are going to go ahead and start, attacking these lows, and if I go ahead and go back to that daily order block, if we are going to go ahead and see them attack sell side liquidity on on US30, I'm sorry, which would be this the real last low on US30 on the daily, right? If we were going to see that, and then on a lower time frame, probably could identify right here as a low on a lower time frame, because it actually has two candles to the right above it and two candles to the left above it that they didn't have on the daily. So I would consider this to be sell side liquidity, but on the 4 hour, you feel me? So if they are going to attack this liquidity or this liquidity, I'm just letting y'all know, like that's big time high resistance liquidity run. So even if they making that shake, it's not going to be, you've already seen how that attack has been going, you feel me? Multiple rejections over the past right, like Friday came, rejected away, and then boom, Thursday morning, 1 a.m., traded into it, rejected away, traded into it, rejected away. So many times, right? They tried to go ahead and burst through this zone, and we just got rejections off of it. So I'm primarily just going to use the divergences when it comes to these indices and just trading those at the certain times that I need to. Like, it's just so choppy, right? That, like, if you don't remember nothing from this joint, don't predict, just respond, react. Gold, my baby Goldilocks. Again, also very affected by what the dollar has going on. And I mean, I still feel like gold really gotta attack these all-time highs at some point. That's still how I feel. We're really close. Like, it's like you didn't drive this far to not get nothing from the supermarket type shit. You feel me? Like, we just didn't we didn't make all these higher highs to not get nothing. No liquidity, no stop. You're gonna let these cats stop losses from 2020 chill. Stop losses from 2022 chill. It's crazy to me, right? They came and swept these though, right? We did see them sweep the highs from April 22nd. Maybe that's enough for them, right? Maybe they won't be greedy, but I can't name a time these guys wasn't greedy, man. Right? Can't name a time these guys wasn't greedy, man. Right? But yeah, they slid up into that. I will be confirmed that gold is not trying to go higher right now, which fundamentally doesn't really align, right? You got a lot of nations trying to back their currencies by gold right now, right? You got a lot of robotics in creation, a lot of batteries being created because of these drones and robots and things of that nature. So, I mean, and a lot of those things come from gold and silver. You feel me? So, I'm not gonna lie to you. Fundamentally and liquidity wise, like, I see gold trading higher, right? I mean, we even seen how they attacked this weekly order block right here, which was the last down candle before this up move where they took the liquidity here. That last down candle right here, and we can see last week, which is this weekly candle because we're on the weekly time frame. We can see last week they dropped right down into that order block. Dropped right to it, rejected, and held it. You feel me? So, I mean, if anywhere they're going to catch a foothold, would love to see, how they respond here. But if they break this and come under this, like, I'm talking about even for, like, if this week, like, in any way, capacity, shape, or form, if we come below this order block right here, on that weekly time frame this was from March 21st. If we come below that and we don't hold that today, tomorrow, all you gold sellers, yeah, go ahead and feel comfortable, right? If we come below that and reject back up to it, we're taking something before we go higher. That's 100%. Like, I know that much, right? If they close below this, and that means, I guess, this week would have to be bearish. If we get a bearish week on gold and they come below this thing and close below this thing, or you're even on a daily time frame and you see a day close below that thing, they gotta take something up out of there. They gotta take something. And the only next zone for me to really pay attention to on this weekly time frame for gold is the 1840 level, where we had that last order block, which was here. And you can really tell an order block, man, because I was just telling somebody as well, like, it's not the moves when they come back to the order block that's the most important, right? The most important moves is when they just created the order block and you have a candle that trades right back into it, man. Like, that's when these, like, when you get these next candles and you're able to identify this, that's when you're able to be extremely confident on the burst. And you can see as soon as they formed this order block February 27th, they engulfed it. That next week, March 6th, they dropped back into the order block. They have not been back since. Literally 1, 2, 3 weeks of bullishness, gave a little bit of a retracement, gave another pop bullish, and then they never came back to that thing. So this is where I have my eyes on. And if they're going to trade higher, they won't even come back to this order block. Hear me, right? If they are going to trade higher, gold will not even come back to this order block. They will trade back into this fair value gap here, right? They'll trade into that fair value gap and they'll reject, right? Because retracements are paired with fair value gaps. expansions are paired with order blocks, right? So that's the reason you see they form this order block, traded back into the order block. If you're expecting an expansion and you just got a trade back into an order block, that's ultimate execution, right? Once you've had the expansion and you see a retracement, the question is, where do we retrace to? We retrace to the fair value gap, right? So that's why I say if you see them break below this order block, then you would take that setup off the order block to the fair value gap. You get what I'm saying? I mean, you don't have to take all, that's damn near an 800 pip move, right? You don't have to take that whole thing, right? You don't have to be that guy. You can if you're a swing trader of some sort, but the idea is more so on an intraday level, you can expect for them to trade through and to that. You can look for multiple opportunities and trust the sell side until they get to that zone if we break this. But if not, you see the struggle they're putting up right now. And that's why I say this week is really less of a week of prediction and it's really a week of response, right? So a response to if we hold this level, get some bullishness coming up out of this, and then they trade back into this level, all right, I'm gonna pay attention to that, you know? Or if we just see bearishness, we trade underneath this and we trade back up into this level, I'm gonna pay attention to that, I'm gonna execute, right? But just know the market conditions right now are definitely not for, you know, they're not the easiest market conditions, and honestly you would be safe to just study, right, to just pay attention to it. But I'm gonna just be honest, right, if you are going to trade in this type of condition, you want to respond, you feel me, you want to respond to what the market's giving you every day. So that's gold. That's all I have on these guys. It ain't much to talk about when the market is doing weird stuff like this. No kizzy. So that's all I got for my outlook. That's all I got for my outlook. Like I said, just looking to respond to how the dollar reacts to these areas of liquidity, and pairing everything else with it. You feel me? So I'm got this recording. I'm gonna have it uploaded shortly. But yeah, would you have held that buy, or would you have held that buy or looking for multiple buys in that time frame? What pair was I on, bro? Oh, gold. Here on gold.